Ready to level up your trading game? In this video, I'm revealing the top 5 price action strategies using Lux Algo's premium indicators that could transform your trades from losing to extraordinary winning. With over 100,000 traders already using Lux Algo to dominate the markets, you don't want to miss out on these setups that could take your profits to the next level. Let's kick things off with our first strategy. This strategy shines on lower time frames like the 1-minute and 5-minute charts, making it ideal for day traders aiming for quick, consistent profits. It also performs impressively on higher time frames like the 1-hour and even on daily charts. Whether you trade cryptocurrencies like Bitcoin and altcoins, major forex pairs, or stocks, this strategy delivers exceptional results. Imagine the potential profits you could achieve with such a versatile strategy. I have tested this strategy 100 times manually on the XAUUSD 1-hour chart, and here are the results. I started trading with a $5,000 account balance. Depending on volatility and the session, I use 5 to 10% of my account per trade. For example, if I profit $100 on a trade, my new balance is $5,100, and I use 5 to 10% of this updated balance for the next trade. Conversely, if I lose $100, my balance drops to $4,900, and I use 5 to 10% of this new balance for the following trade. Just think about how quickly your account potentially could grow with such consistent wins. Traders, before we start, make sure to like this video and subscribe to my channel. This way you won't miss out on any of the powerful trading strategies I share, which can significantly boost your trading success. Okay, without wasting any time, let's get straight into it. Today, I'm excited to share a powerful strategy based on reversal trading. If you're not familiar with reversals, it's a technique where you enter the market when you anticipate a complete change in the prevailing trend. In simpler terms, you buy when a downtrend is about to reverse into an uptrend, and you sell when an uptrend is about to reverse into a downtrend. This approach allows you to capitalize on major market turning points and can significantly boost your potential profits. However, it requires careful analysis and timing to ensure that the reversal is genuine and not a temporary correction. This style of trading can be quite risky on lower time frames, especially if you're not experienced. But don't worry, the strategy I'm about to show you in this video is a very safe version of reversal trading. It follows strict rules, each of which is absolutely crucial to follow. By adhering to these rules, you can minimize risk and achieve highly accurate trade entries. Imagine making nearly foolproof trades and watching your profits soar. As an example, we will use the FTM price chart on a 1-hour time frame. The strategy includes 2 indicators only. In order to add the indicators, click on the Indicators tab and search for Lux Algo Signals and Overlays Premium. It is the most popular premium tool created by Lux Algo. It has over 25,000 likes, which tells us that it is highly reliable. So, click that to add it to your chart. And for the second indicator, you want to add this one, the Price Action Concepts indicator, which was published by Lux Algo as well. Alright, now let's click the settings of the Signals and Overlays indicator. For the signal mode, we want to use Confirmation and Exits. Set the candle coloring to Confirmation Simple, and leave the Smart Trail enabled. For the signal's sensitivity, depending on the asset and time frame you're trading, I'll recommend using the Autopilot sensitivity set to mid-term, or use the manual sensitivity recommended by the dashboard. Now you want to click the Style tab and disable both the bullish and bearish exit signals, as we don't need them for our strategy. Moving on to our second indicator, open the settings of the Price Action Concepts indicator, and let's start with the Market Structure labels. We want to use the internal market structure labels as an entry confirmation, so make sure to set this option to All. Depending on the asset's volatility, you should use a look-back period between 5 to 10. Personally, I prefer using 8 for the 1-hour time frame. For example, when trading Bitcoin on lower time frames like 5 or 15 minutes, I am using a value of 10. The same principle applies to order blocks. Depending on your asset's volatility, use a length between 5 and 10. For the time frame, ensure you use a time frame that is 2 to 4 times higher than the one you're currently trading on. Since I trade on the 1-hour time frame, I use the 2-hour time frame for order blocks. Remember, you should adjust these values based on your specific asset and time frame. Our setup is ready. For today's strategy, our main focus lies on order blocks. These blocks on your chart represent areas where significant institutional orders have been placed, similar to supply and demand zones. At first glance, you might think, just buy at the order block and sell at another block. However, while these blocks are excellent for identifying high activity areas, we need more confirmation to make profitable trades. Order blocks are crucial for identifying significant support and resistance areas, whether the market is ranging or trending. These blocks function like supply and demand zones, but are more precise in highlighting institutional activity. But you need to make sure to incorporate these blocks into a broader strategy. We'll use order blocks to find entry points, but this is only our first entry confirmation rule. Trading based solely on these blocks would not be profitable on the long haul. The primary function of order blocks is to act as initial signals. When the price comes back to retest an order block located below the current price action, it suggests a potential buying opportunity, and when it goes up to retest an order block located above the current price, it indicates a potential selling opportunity. However, you're going to want to make sure to have additional confirmations before entering a trade. So, watch for the price to test these blocks. Use the order blocks as your first confirmation method to identify potential entry points. When the price tests a bullish order block, consider it as a potential area for buy trades. Conversely, when it tests a bearish order block, consider it as a potential resistance area for sell trades, and always look for further confirmations before making your move. So, when exactly should we enter buy or sell trades? Here are the exact rules for a buy position. Make sure to pay close attention to every single one of them. First, watch for the price to go down to retest an order block sitting below the current price action. Next, ensure the price action enters and completely exits the order block. This step shows the market is preparing for a bullish reversal. Second, wait for a green buy or strong buy signal. This confirms the upward momentum. Third, check that the smart trail is blue-colored. This indicates the trend is in your favor. And fourth, most crucially, wait for a bullish market structure label before entering a buy trade. This confirms a potential trend reversal. If all these conditions are met, enter a buy trade. For the stop loss, use the smart trail, the order block, or the most recent swing low. And for profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. By the way, this video isn't sponsored by Lux Algo. However, using my link in the description, you can support my channel and get up to a 20% discount on their premium indicators. And with a 50% discount for annual subscriptions and a 30-day refund policy, there's no risk in giving it a try. Now, this was a 20% move with a 1 to 3.3 risk-reward ratio. Look how perfectly these indicators match when it comes to spotting reversals. Now let me show you another buy trade example. First, watch for the price to decline and retest an order block situated below the current price action. Next, ensure the price action enters and completely exits the order block. Second, wait for a green buy or strong buy signal. Third, check that the smart trail is blue-colored. Finally, and most importantly, you want to wait for a bullish market structure label to appear before entering a buy trade. If all these conditions are met, enter a buy trade. For the stop loss, use the smart trail, the order block, or the most recent swing low. For profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. This trade delivered a 16% gain with a 1 to 1.8 risk-reward ratio. Amazing how these indicators contribute to our trading success. Traders, if you like this video and strategy, don't forget to hit the like button and subscribe to my channel. Moving on, let me show you how you want to enter a sell trade. First, watch for the price to go increase to retest an order block sitting above the current price action. Next, ensure the price action enters and completely exits the order block. This step shows the market is preparing for a bearish reversal. Second, wait for a red sell or strong sell signal. This confirms the downward momentum. Third, check that the smart trail is red colored. This indicates the trend is in your favor. And fourth, most crucially, wait for a bearish market structure label before entering a sell trade. This confirms a potential trend reversal. If all these conditions are met, enter a sell trade. For the stop loss, use the smart trail, the order block, or the most recent swing high. Remember, if you want to take your trading to the next level using Lux Algo Premium indicators, use my link for the chance to get up to a 20% discount. And with a 50% discount for annual subscriptions and a 30-day refund policy, there's no risk in giving it a try. And for profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. Now, this was a 20% move with a 1 to 3.9 risk-reward ratio. Look how perfectly these indicators match when it comes to spotting reversals. Now, let me show you another sell trade example. First, watch for the price to go up and retest an order block situated above the current price action. Next, ensure the price action enters and completely exits the order block. Next, wait for a bearish confirmation signal. Third, check that the smart trail is red-colored. And finally, wait for a bearish market structure label before entering a sell trade. If all these conditions are met, you want to enter a sell trade. Set your stop loss, and for profit taking, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line.
Strategy number 2 is all about maximizing your edge with precision timing. This strategy is not only simple, but it might be the most effective way to trade on the 15-minute chart, especially if you're looking for consistency and precision. Let's dive deeper into why this method works so well and how you can use it to take your trades to the next level. First, we need to configure our indicators properly. The first indicator we'll work with is highly customizable, which is key to adapting to different market conditions. So go to the settings, and the first thing we want to do is set the signal mode to contrarian and exits. Now this is important because contrarian signals can help you catch reversals before most traders even spot them. By pairing this with exit signals, you're given early warnings of potential shifts in market momentum, which helps you fine-tune your entry and exit points. Next, we adjust the sensitivity. You want to set it to the optimal value, which is displayed on the indicator's dashboard. This setting is crucial because it tailors the indicator's behavior to the specific market you're trading, filtering out noise and giving you cleaner signals. Keep in mind that markets can be very noisy, especially on smaller time frames like the 15-minute chart. So this adjustment ensures you're not entering too early or too late. For the candle coloring, set it to none. This might seem counterintuitive at first, but by removing the distraction of colored candles, you can focus solely on the indicator signals and price action. This minimalistic approach helps you see the big picture without getting overwhelmed by too many visual cues. Now, disable the Smart Trail feature. While the Smart Trail can be useful in some contexts, in this strategy, we want to rely on the reversal bands instead. So go ahead and enable the reversal bands. These bands act as dynamic support and resistance levels, helping you identify key reversal points in the market. The bands work best in volatile markets where price tends to bounce between support and resistance, and that's exactly what we're targeting with this strategy. Once you have the first indicator set up, it's time to move on to the second one. This indicator is all about highlighting fair value gaps, which are crucial areas in the market where price is likely to return before continuing its move. So in the settings of the second indicator, disable everything except for the fair value gaps. These gaps represent inefficiencies in the market where buying and selling weren't balanced, and they often act as magnets for price. It's important to use a higher time frame for this indicator because it provides a more significant perspective on where these gaps exist. For example, if you're trading on the 15-minute chart, you might want to use the 1-hour chart to spot these gaps. The reason we use a higher time frame is that it helps you avoid false signals and gives you more reliable zones of interest. Alternatively, if you're trading on the 5-minute chart, set the indicator to pull data from the 30-minute time frame. Now, let's take a look at an example trade setup. At this specific candlestick, something very interesting happens. First, you can clearly see a buy signal from the first indicator, and at the same time, price action is filling in a fair value gap that was left behind. But there's more. Price also bounces off the lower reversal band, which is an additional confirmation that the market is likely to reverse and head higher. And if you check the indicator's dashboard at this moment, you'll notice something else. It shows a bullish trend strength. This means the current market momentum is heavily in your favor, giving you even more confidence to enter a buy trade. So with all these bullish confluences lining up, the buy signal, the fair value gap being filled, the bounce off the reversal band, and the bullish trend strength, this is the perfect moment to place your trade. Now, here's how you want to manage this position. First, you want to set your stop loss using the fair value gap. This gives you a precise level to place your stop, ensuring you're protecting your capital while still giving the trade room to breathe. Next, once the price moves in your favor and approaches a bearish fair value gap, it's a good idea to take some profits off the table. In this case, you would close half of your position at this level. By doing this, you secure some gains while still keeping the trade alive. At this point, you also want to set your stop loss to break even. This means that even if the market reverses against you, you won't lose any of the remaining position. Now, you can let the rest of your trade run. The key here is to allow the market to move naturally with without panicking and closing too early. You'll hold this position until price action reaches the middle of the upper reversal band. This is a reliable point to fully exit the trade, as it often signifies exhaustion of the bullish move. If you're excited about this strategy, I encourage you to try it out for yourself. Lux Algo's premium indicators are a game changer, and you can access them through the link in my video description.
Now let's kick it up another level with strategy number 3. This one's a game changer. This strategy might be the most effective way to trade not only the 15-minute chart, but also for scalpers using the 1 or 3-minute charts, as well as swing traders using the hourly or even daily charts. I've tested this strategy on a variety of assets, from Bitcoin to major forex pairs like EURUSD and gold, and the results were shockingly good, as the winning ratio sometimes reached 80% and above. The strategy is very simple and combines price action concepts with reversal trading. To trade it profitably, you need to follow 4 rules, with the last one being the most crucial. Without wasting any time, let's begin the tutorial. To apply the indicators to the chart, open the Indicators tab and search for Lux Algo Signals and Overlays, and add this one to your chart. And for our second indicator, we want to use the Price Action Concepts indicator. They are premium indicators, and you can test them 30 days risk-free using the link in my bio for up to a 20% discount. And for an even sweeter deal, consider the annual payment to save up to 50%. Now, before I am going to show you the specific strategy for today's video, let's first customize our indicators, and let's start with the price action concepts by double-clicking on it. First, you want to disable the market structure labels as well as the volumetric order blocks. And now you want to scroll down to the imbalance concepts section and enable the fair value gaps. For the time frame, you want to use a 2 to 4 times higher value. I am going to use the 30 minutes time frame as I am on the 15 minutes chart. Now let's access the settings of the Signals and Overlays indicator and customize it for our strategy. First, for the presets and filters, we want to use None. For the signal mode, you want to use Contrarian and Exits, but as you do not need the exit signals for this strategy, you want to click the Style tab and uncheck both the bullish and the bearish exit signals. Heading back to the Input section, set the signal sensitivity to 43, but make sure you adjust this number if you're going to trade another asset or time frame. Moving on to the Indicator Overlays. For this strategy, you want to enable the reversal zones, and you want to leave the reactivity by default set to 3. Now let's learn the complete rules for buying and selling with this strategy. To initiate a buy trade, 4 conditions must be met. First, you want to spot a bullish fair value gap sitting below the price action. A bullish fair value gap is this blue box right here and is automatically plotted on our chart by the Price Action Concepts indicator. Second, you need to wait for the price action to come back to this FVG. Third, while the price is coming back to fill the FVG, at least one candlestick must enter the bullish reversal zone, just like this, as well as a buy signal needs to appear within this move. And finally, the most crucial step is to wait for one candlestick to be completely outside the reversal band to confirm your buy trade. You want to open a buy trade on the next candlestick if these conditions are present. Now for the stop loss, you want to use the fair value gap and place it slightly below. And for taking profit, you do not want to use a fixed risk-reward ratio. Instead, you want to wait for the price action to reach the middle of the upper reversal band. In this example, we would have closed our trade in profit just right here, with a risk-reward ratio of 1 to 3.5, which is absolutely awesome. Let's go through another buy trade example using this strategy. To trigger a buy trade, 4 conditions must be fulfilled. First, identify a bullish fair value gap located below the current price action. Second, wait for the price action to return to this FVG. Third, as the price moves back to fill the FVG, ensure that at least one candlestick touches the bullish reversal zone, like this, and a buy signal appears during this move. And finally, the most crucial step is to wait for one candlestick to be completely outside the reversal band to confirm your buy trade. You should open a buy trade on the next candlestick if these conditions are met. For the stop loss, place it just below the fair value gap. And finally, wait for the price action to reach the midpoint of the red reversal band. In this example, you would have exited your trade profitably right here, achieving a risk-reward ratio of 1 to 2.7, which is fantastic. Traders, if you like this trading strategy, don't forget to like this video and subscribe to my channel. Now let's learn the rules for sell trades. To initiate a sell trade, 4 conditions must be met. First, you want to spot a bearish fair value gap sitting above the price action. A bearish fair value gap is this purple box right here and is automatically plotted on our chart by the Price Action Concepts indicator. Second, you need to wait for the price action to come back to this FVG. Third, while the price is coming back to fill the FVG, at least one candlestick must enter the bearish reversal zone, just like this, as well as a sell signal needs to appear within this move. And finally, the most crucial step is to wait for one candlestick to be completely outside the reversal band to confirm your buy trade. You want to open a sell trade on the next candlestick if these conditions are present. Now for the stop loss, you want to use the fair value gap and place it slightly above. And for taking profit, you do not want to use a fixed risk-reward ratio. Instead, you want to wait for the price action to reach the middle of the lower reversal band. In this example, we would have closed our trade in profit just right here, with a risk-reward ratio of 1 to 3.3, which is very good. Let's go through another sell trade example using this strategy. To trigger a sell trade, 4 conditions must be fulfilled. First, identify a bearish fair value gap located above the current price action. Second, wait for the price action to return to this FVG. Third, as the price moves back to fill the FVG, ensure that at least one candlestick touches the bearish reversal zone, like this, and a sell signal appears during this move. And finally, the most crucial step is to wait for one candlestick to be completely outside the reversal band to confirm your buy trade. You should open a sell trade on the next candlestick if these conditions are met. For the stop loss, place it just above the fair value gap. And finally, wait for the price action to reach the midpoint of the green reversal band. In this example, you would have exited your trade profitably right here, achieving a risk-reward ratio of 1 to 1.3. You can test the indicators 30 days risk-free using the link in my bio for up to a 20% discount, or to save up to 50%, take the annual plan. Ready for more? Let's dive into strategy number 4. It's all about precision and profit. We're currently looking at the hourly Euro-USD chart, and we can spot here a strong bearish confirmation signal. This box right here is an order block using the daily time frame. As we can see here, the price action got rejected off the order block, and we got not only an internal change of character, but also a swing change of character label printed. So I'm going to enter a short trade. I'll use the smart trail for my stop loss, and for my take profit, I'd like to hit this order block sitting below the price action, but I am going to use 2 take profit targets, and for exiting my positions, I am using the exit signals. So let's see how this trade is going to work out. Okay, so here we can spot the first exit signal, so I am going to close half of my position at this point and adjusting my stop loss to break even, and now I am simply waiting for the exit signal to appear so I can close the rest of my position. And there we go. That was a nice winning trade with a 1.4 risk-reward ratio. In order to add the first indicator, click on the Indicators tab and search for Lux Algo Signals and Overlays Premium. It is the most popular premium tool created by Lux Algo. It has almost 25k likes, which tells us that it's quite legit, so click that to your chart. Now, let's open the settings of the Lux Algo Signals and Overlays indicator and adjust its settings. First, let's take a look at the basic settings for the presets and filters. For the signal mode, you want to use confirmation and exits. And you do not want to use the AI signal classifier, so make sure this option is disabled. For the signal sensitivity, I'd recommend using the autopilot sensitivity set to mid-term. Next, for the candle coloring, we are going to use confirmation simple. For this strategy, you'll need the smart trail overlay, so make sure to enable this option. You can leave the value for the reactivity as it is. By default, it's set to 3. Now you want to scroll down a little bit, and within the advanced settings, you want to set the autopilot sensitivity to midterm, and we are good to go. Now you want to add a second indicator to the chart. Let's click the Indicators tab again and search for LuxAlgo Price Action Concepts, and add this one to your chart. Now let's double-click it to access its settings. Set both market structure options to all. Enable the volumetric order blocks and set the time frame higher than the time frame you're currently on. So like in this case, we're on the 1-hour chart, so we want to set this to the daily time frame. Now on to the fun stuff. Let's delve into the trading rules to understand how to use this strategy profitably. We're currently looking at the GBP USD on a 15 minutes time frame. For trading the 15 minutes, I usually set the time frame for the order blocks to 4 hours. Let's first start with the rules to enter a buy trade. For a buy entry to be valid, there must be 4 conditions met. First, you need to identify an order block where the price action bounced off of it and closed outside of it. Second, you need to see a bullish confirmation signal. Third, to confirm the buy trade, you want the market structure to confirm your entry by printing 2 uninterrupted market structure labels. So in this case, a change of character and a break of structure label. Now at this point, all conditions for a buy trade are met, so we're entering a buy trade. Now for setting the stop loss, you can either use the smart trail, the order block, or the recent lowest price. I'll go with the recent lowest price for this trade. For taking profit, we'll again use the blue exit signals, so let's wait for the first exit signal to appear. There we go. Our first exit signal got printed, so we want to close half of our position at this candlestick and then set our stop loss to break even. And now we want to let the rest of the position run until the second exit signal appears. And there we go. Another winning trade with a 2.3 risk-reward ratio. If you're loving the insights, don't forget to subscribe and hit the like button so you won't miss what's coming up next. Alright, now let's see a sell trade example using the Bitcoin on a 3 minutes time frame. Here we can see the price action getting rejected off this order block. For the order blocks, I am usually using the 15 or 30 minutes depending on the asset and current volatility. So you can spot here a strong bearish sell signal and a change of character label. What that means is we still need to wait for one more confirmation before we can enter a sell trade. So let's wait for a second market structure label to appear. Now a second market structure label appeared, so we want to enter a sell trade and use again the smart trail for setting the stop loss. Now we want to wait for the first exit signal to appear, and there we go. We're going to close half of our position and this candlestick, and we want to set our stop loss to break even. And now we want to let the rest of our position run until a second exit signal appears. And unfortunately, we got stopped out break even. Now let me show you one more buy trade example looking at the 4 hours Nvidia chart using the daily order blocks. We can spot here two uninterrupted bullish market structure signals and a strong bullish confirmation signal. So we're going to open a buy trade here and using the same method for taking profits. We're going to close half of our position at the first exit signal. Then we set the stop loss to break even and let the rest of our position run until the second exit signal appears. Now for the grand finale, another powerful way to master price action. First up, let's open the signals and overlay settings. Here, the AI signal classifier is enabled, sensitivity set to 16, and both the trend catcher and trend tracer are activated. The AI classifier is set to 1 to 4. The approach zeroes in on confirmation and exits for signal mode, covering all the bases needed. Switching gears to price action concepts, the settings are dialed in to capture every nuance. Both internal and swing market structures are on the board, paired with volumetric order blocks pointing to the 1 hour time frame. Not stopping there, equal highs and lows are adjusted for the long haul, alongside liquidity grabs and fair value gaps, and the fair value gaps anchored to a 1 hour view. With these settings locked in, just hit OK and the trading stage is set. A golden rule in this trading method: steer clear of pre-market and after-hours trades. The reasoning? It's all about volume's presence. This focus escalates the win rate, avoiding the pitfalls of a quiet market that often leads to a signal mix-up. Buy, sell, and repeat, leading to confusion and missteps. This video is crafted to navigate you through the trading tempest with clarity and precision. Now let's take a look at the rules for trading this strategy, and we're going to start with the rules to enter a long trade. For the sessions, you want to use a free indicator which is called Sessions by LuxAlgo, and you want to enable only the New York session. As you can see here, the New York session started a few candles ago and we got this green buy signal with a 3 in it being printed. The higher the number of this AI signal, the stronger the signal. So if you're a beginner trader, I recommend to use only the signals 3 and 4. Okay, so we got this 3 being printed, but before entering into a long trade, we need at least 2 more confirmations. As you can see, the trend tracer is giving an entry confirmation. It is shown by this green plus signal. And for the third confirmation, you want to check the trend catcher, which is this line right here and is as well colored in green. Plus, a quick scan by zooming out shows the market's overall mood is bullish, and with no bearish order blocks in sight, your path is clear for a long trade. You want to set your stop loss at the recent lowest price, as this bullish order block is too far away for using it to position the stop loss. And now, you are not going to use a fixed risk-reward ratio for the target. Instead, you're going to wait for a blue exit signal before taking half of your position off. Now here, you can see the exit signal being printed, so you want to close half of your position and adjust your stop loss to break even. This way, you can confidently wait for another exit signal, as you can't lose anything more now. Moving on, you can observe a lot of bullish signs like both the trend tracer and the trend catcher being colored in green, and those bullish break of structure labels being printed, indicating everything is looking good. But now, here you can see a bearish AI signal being printed, and the trend catcher is now red colored. So, 2 things can happen at this point. First, this could be a small pullback only and the price action will soon go up again. Or second, the market could start showing more bearish signs and maybe reverse, targeting the bullish 1 hour order block down below. But you can now confidently watch and wait to see what happens, as you've already adjusted your stop loss to break even. So even if the price action hits your stop loss, it doesn't matter because you can't lose anything. And now, as the market is going higher, printing an AI signal classified with a 3, which is strong, along with 2 more bullish break of structure labels, and as you can see here, another exit signal being printed, you are going to close the rest of your position after a 3.7% move on a 5-minute time frame, which is very good. Now let's explore another long trade example. Here you can spot a bullish AI signal with a 3, indicating strength. The trend catcher line is colored in green, giving you your second entry confirmation. However, the trend tracer is flashing a red plus sign, so you don't want to dive into a long trade just yet. Instead, you'll wait for the market to present more bullish signals before making your move. Okay, now the trend tracer has flipped from red to green, fulfilling your third entry condition. Plus, the price action indicator is showing a bullish change of character label. A bullish change of character occurs when the market transitions from lower highs and lower lows to higher lows and higher highs. With sufficient bullish signals now on display, you're all set to enter a long trade at this juncture. You'll use the recent lowest price for your stop loss, and for your first take profit, you'll wait for a blue exit signal to appear. Once an exit signal pops up, you're closing half your position and adjusting your stop loss to break even. As the market sweeps for a liquidity grab, you find yourself stopped out at break even. Okay, now let's take a look at a short trade example. You can see here a sell signal classified with a 2, but you do not want to enter a sell trade at this point, as both the trend catcher and the trend tracer are giving bullish signals, and furthermore the candlestick is purple colored. Now both the trend catcher and the trend tracer switched from bullish to bearish. Plus you can see here a bearish change of character label being printed, so all conditions for a short trade are met at this point. But, zooming out, the market is in an uptrend, so if you are a beginner trader, I would recommend to skip entries like this one. As an advanced trader, you can spot here a resistance zone. Furthermore, there are some bullish order blocks being located below the actual price action, so there's a high chance the market starts a small correction before moving up again, targeting those order blocks. So, you are going to enter a risky sell trade, use the resistance zone for your stop loss, and you are waiting for a bearish exit signal being printed. Now you got an exit signal being printed, so you close half of your position and set the stop loss to break even. Notice the internal market structure gives you a bearish break of structure label, and you got this huge swing change of character label being printed, which gives you a lot of confidence that the market will go down more, targeting the lower order blocks. Now at this order block, you can close the rest of your position as this was already a big move with a 9%, or you want to wait for the indicators to show you when to exit your position. So at this point, you got a buy signal being printed, you can spot a bullish change of character label, and both the trend tracer and the trend catcher switched from red to green, so you want to close your short trade at this point. Now let's see another short trade example. Let's take a look at what you can spot here. First of all, you can see a bearish order block above and 3 bullish order blocks below, and you want to keep in mind that the market can tend to target and hit those order blocks at some point. The candlestick switched from being green to red colored. You can spot this huge bearish swing change of character label, some bearish internal market structure labels like this change of character and these 2 break of structure labels. You can see a sell signal classified with a 3, and you can see both the trend tracer and the trend catcher are colored in red, which gives you enough confirmation to enter a sell trade at this point. The bearish volume block is way too far away to use it for your stop loss, so you want to use the recent highest price for positioning your stop loss, and now you are going to wait for an exit signal being printed for your first take profit target. Your first target is hit, so you close half of your position in profit and you adjust your stop loss to being set to break even, which means you can now confidently watch what happens next as you are not risking anything more. Now at this point you got stopped out with just a small win, but that's totally fine as you already took profit. Now a few candles later you are still within your New York session and you got another short entry, confirmed by this sell signal combined with both the trend tracer and the trend catcher being colored in red, and you keep in mind the price action is potentially targeting this order block below. So you are going to enter another short trade using the recent highest price for the stop loss, and you are waiting for an exit signal being printed for taking your first take profit. And there we go, the market has hit this order block and gives you a bearish exit signal, so you close half of your position, you set your stop loss to break even and watch what happens next. And you got stopped out in profit just right here. Okay, that wraps it up for today. If you want to learn my best strategies for trading crypto, forex, and stocks, check out one of these videos.